After falling rather to a 10-month low, the Naira is slightly stronger today after the central bank intervened in the interbank market. And right now to join us for a discussion around the currency and of course the fixed income market is Bankole Odusonya, a fixed income trader at UBA. Thank you so much, Bankole, for joining us. So the Naira today closing at just above 159, and I think the weakness continues. One can argue that it's slightly stronger given where it traded recently. But talk us through your thoughts about the dynamic we're seeing right now, because some people are saying that the Naira is now finding a new level, a new strong support level, if you like.
Yes, thank you, Wale. This is what we have seen in the last few months. Initially, the low was at 157 levels, and then it got to 158. We thought that the defense will continue, in fact, to bring it back to 157. Of course, what we've seen is that yesterday it touched 160.4, right, and then there was an intervention yesterday and today. But the perception is that we didn't see CBN sell as much as they used to. Of course, it's not as if they've lost their will in defending the Naira. What I think they are doing is to observe, because if he has to be a long-term defense, then it has to be staggered and all that. And then to an extent, we need to know where the demand is coming from, or the lack of supply. It's very obvious that it is the slowdown from foreign portfolio investors that we've seen. And of course, if you check the reserve, the foreign reserve, you've seen there's been marginal drop also. It's not because of any major drop in volume and price. That had been ongoing. But because FPIs have reduced or slowed down in their level of activities on the bond market.
So foreign portfolio investments reducing, we're seeing a little pressure on the external reserves. Are we seeing any evidence of panic, particularly for those that you will expect who would probably front load their demand in times where they think the Naira may be about to slide? Are we seeing any evidence of that in your view?
No, there are thoughts about that, but I've not seen any evidence of a sell down, honestly. What we've seen is that people have dropped the volumes or amounts they used to buy, and we've seen people switch their maturities from maybe monies that are coming from bond maturities. Instead of taking it back into bonds, it's gone into very attractive yields of T-bills. Treasury bills have gone from 12.8 since Friday to about 13.12 and 5 levels. So we have seen T-bills at 13.5, matching what the bonds are doing. As at Friday, we had a positive yield curve. That is, bonds had gotten to 13 and 13.5, 13.8 levels, but yields on T-bills were at 12.8. But as we speak, it's very bearish. You don't want to hold the security with the yield at 11, 12, whilst the next auction, comes out.
What are your expectations for the auction, though? Of course, we have an auction holding tomorrow. So what are your broad expectations from that auction?
There's 2015, 2017, and 2030 maturities coming up. And our anticipation, the market definitely knows that the yields that will be going in will be very high, of course, increasing the cost at which the FGN will be borrowing money. Of course, they have the long-term objective of reducing the amount they need to borrow. That will be behind their mind. So basically, they'll try to sell as much as they can, even though the market or most counterparties will quote very high. We're looking at 14, 15 levels higher than what market is. The few bond maturities that are trading at definitely 13.8, very close to 14. Of course, you have to do a margin just in case you buy, you can arbitrage over the market.
Okay, so these are clearly very volatile times for Nigeria's fixed income market. So how do you trade this? How do you play this market in your view? Do I go into the long end? Do I go into the short end? Where is the best place to position if I was a trader in Nigeria's fixed income market?
Yeah, the most attractive are the T-bills at the short end. Their yields are just as high as the bonds. And then for bonds, we're seeing people doing all sorts of repos in order to sell and buy back. That's what's caused the slide in price and has enhanced the yield.
But interesting,
the enhancement in yield, of course, makes it attractive for those who have not gotten in initially. So we're going to see some demand also at these very high levels.
Right. An interesting dynamic, though, is that while all this is happening, the money market is awash with liquidity. Interbank yields at about 10.5%. So it's interesting that we're seeing higher yields in the T-bill auction, in T-bill market, while in the interbank market we're seeing like 10.5. How do you justify that?
what has happened today, that was all through last week. What has happened today is that illiquidity, happened to, money is dried up today because of all the FX sales and buying of the dollars, pressure on the Naira. So money dried up today, and we've not seen any federal allocations. I mean, today is 11th. So going into next week, we expect federal allocations to bring down these rates, and maturities on Thursday would actually bring this down. Even though 85 billion will be leaving system on Friday for bonds issuance.
What's your assessment of the OMO auctions to mop up this liquidity? Because this is something that is with us, and I think will always be with us for the foreseeable future. The liquidity that comes from these monthly allocations, and of course, the central bank has been stepping to the plate to mop them up recently. So, how do you assess OMO auctions going forward?
Yeah, what we've seen in the last 4 major almost that they did was that on 2 occasions they didn't sell at all because people quoted very, very high rates.
Right.
I mean, to guard against yourself, like I said, to leave room for arbitrage, So the CBN didn't sell. Of course, the costs were too much. And then there were some special OMO bills that were sold. The rates in the secondary market have beaten down those, gone higher than those ones. And in fact, we have short-term securities now have attractive rates compared to those ones. So it's been bringing some form of conflict, and the CBN is reluctant to sell at these very extreme levels. But on the long term, something has to give.
All right. So if we go back,
either leave the liquidity or mop it up at these high costs.
Right. Okay. So if we go back to the foreign investor interest, clearly the yields are much better now. So those that are looking to return to the fixed income market will probably find very attractive levels right now. So what do you anticipate? Do you anticipate that foreign interest to resume, sir, perhaps in the next 1 or 2 weeks?
Definitely. We'll see if FPI is coming in to buy on every auction, but we may not see the numbers we used to have at the end of the year and the first quarter of this, and the end of last year and first quarter of this year because of the publicity about, the listing of Nigerian bonds on foreign indexes. That has waned, and some people are taking advantage to sell or, to shuffle their portfolios, basically. And for those who are statutorily required to buy bonds, this is the best time. I see pension funds coming in heavy tomorrow, basically.